made the biggest investment mistake. So in my early days, and this was, I'm trying to think of the year, many years ago. I was doing a strategy. I think you could still probably make it work now, but the market's not as smooth as it was back then. But the market was a little bit more, kind of like smooth, I guess, rather than like sort of jerky with the whole Trump effect, like one day it's up, one day it's down. This is more of a sort of a gradual. So I would do a trade where I would, or had a trading strategy, because I'm a big fan of trying different things to see what your strong area is, and so to speak, what you like, what you don't like, that kind of thing. So kind of settle in where your sweet spot is. So I was trying a strategy where I would do very short-term options on very heavily traded liquid options. So like Apple, IBM, GE, these kinds of things, these big players where they have 10 or 100 million shares trading, and their options market also has, millions in volume.
You want to very quickly explain options because some of our audience may not know options.
Sure, stock options. So it's bet on a stock, basically. Without owning the stock, you bet, and you can make more money that way or lose more money, on a stock. So it's just you don't own the actual stock, but you're making a financial bet on whether it's going to go up or down or, sideways, basically. So now, whenever you trade options, if you're familiar with the options market, the main issue you run into is the bid-ask spread is so fall apart. Meaning, if you buy a, let's say XYZ company has a call option, so you're gonna make money if the stock goes up, call option, and the stock is trading at $100, and you go ahead and try to make money on the stock going up. Let's say you think it's going to go to 105, you buy the call at a strike price of around 100, and you buy that. Let's say the call is 75 cents. Well, if you go ahead and turn around that trade in the same day, 75 cents, you might get out at 50 cents. So you get in at 75, and say the stock moves up a little bit, and you get out at 50. If you do same day, in and out, round trip. So that bid ask is huge. The options market is way less liquid, so there's a lot more bid ask spread, unless the stock is the option market for that stock is very heavily traded, which generally on these big boy stocks, the Teslas and all that. So there are Ford is a good example where the options market is just very thin bid ask. So you take a small hit. So I would do these 1 hour trades. And if good news, let's say Ford, let's use Ford as a good example. Let's say they had a good report, earnings report, sales, whatever. First thing the market opened, it would start going up. Let's say it was like $12 and it goes up, it goes to 12.10, 12.15. I would buy the calls expiring, like I'd buy like 100 calls expiring that Friday, the soonest date I could find. Let's say I'd buy 100 calls, let's say $12 calls. So then the stock stays at 12.20 when I do this. And all I'm trying to do is get from 12.20 to 12.30, maybe 12.40. I buy the call at, let's say I buy like 100 calls at they're 50 cents. So and I buy 100. So that's going to be a total amount. I think I'm doing the math right. 50 cents, that's $50 times 100 would be 5,000. 5,000 at risk on this trade. And most likely in those scenarios, I had a 75% success ratio. It would go up at least, have a little momentum go up to maybe it only goes up to from 13.20 to 13.30. It doesn't go up to 40. And I'm like, yeah, I'm taking my money. I get out, I get like 10%, 20% profit, whatever it is, even after the bid ask spread, the commissions, which are pretty significant. Take that out and I have my money and I'm happy, right? I don't do this trade every day. I'm just watching for a bigger move that I can just take a piece of that move, leverage with options. So now I was doing the strategy. It was great. I was doing it for several weeks and I was ramping up the strategy, actually more like a couple months at this point.
Was this was
And
just Ford? Sorry, was this just Ford stock? Or
the actual stock I was trading was Microsoft.
okay, thank you. I don't.
Yes, yes.
Yeah, go ahead.
Sorry, yeah. Yeah, but you might have good news with Ford one week and then Microsoft the next week and then GE the week after that. So you're just agnostic. All you're doing is just betting on the momentum continuing for a half an
Uh,
hour, 10 minutes.
Can I say one thing? Keep in mind
Sure.
when you're doing options, you need to do 100 shares, so there is price differential for the shares, am I correct? So for example, you have to do bags of 100 shares minimum.
Yeah, you have to do so every like if you do a 50-cent option, you have to spend $50 because it's times 100. You're doing 100 shares.
Correct. Go ahead.
So yeah, and I'm buying big blocks of options. So I'm buying because it was pretty profitable. I think my average profit percent was 20% a trade, not counting the losses. So 75%. So it was it was growing the account and was doing well. So now the dreaded day, I think it was like May, right after my birthday, um, May 12th or something like this. And I was feeling a little cocky. Microsoft had some bad news. So I did a big position. I did I think most of my account, 500 contracts of the put ones, the one that make money when the stock goes down. Bought those, most of my account in there. I was like, all I need is 20 cents to dip down. It did not dip down.
Oh boy.
It went up. And then it went more up. And Microsoft had a bad quarter or whatever. So statistically speaking, it was likely to go down. And I was just like, maybe it's just a wiggle. Maybe it's a big wiggle. Maybe it's a abnormality.
Right.
Eventually you could just see it was not a wiggle. It was, it was up and away. And it was just kind of like, so I got out of the trade with $11,000 loss after, an hour and 15 minutes or something like that. And I was just like, like that hurt.
Yeah. No.
Yeah. So my account was quite in tears after
So you
that.
say, I guess, was there anything else you wanted to add before I had some questions?
Yeah, I did want to do some sort of like so now you can learn a couple different lessons from that. One is that a trading strategy that has a 75% success is not 100%. So one thing that I had read about this, but I really kind of learned that to put all your eggs in one basket is, I wouldn't say super risky, but with like that Microsoft thing, like that kind of strategy where it doesn't have to go down. There's no like God doesn't come down and say it must go down. Like it's just likely, it's like likely to be sunny here in Florida, but it's not 100%. Some days are cloudy. So, so that's one thing that I kind of learned from that, is that you don't want to bet 100% unless you're really confident. Or if you have a tiny account, you can bet 100%. If you have like a account of like $500 or $1,000, I wouldn't allocate like $3, but you know what I mean. Like the tiny account's fine. Once your account starts growing in size, you start being a little more careful about putting all your money in something. It's just your certainty needs to be really high for that. So yeah, so that's one thing I learned. And then also so the bad news, so stocks are kind of, especially like a Microsoft order, stocks are also sort of dangerous to short, I guess you might say, is one way. Stocks are more likely to go up than down. You have inflation, you have people in the company pushing it, you have insiders, you have a lot of reasons for it to go. Not that all stocks go up, and I've made money shorting stocks too, but like it's more dangerous than betting on a stock going up where you're buying the calls. That's another thing I learned in that thing. And so those are my two main lessons. But yeah, I just thought it was basically like Fidelity or whatever. They decided to add their position for the quarter in Microsoft, and they didn't care if the news was bad because they're buying for this, they're holding the stock for 50 years, 20 years, whatever. And they just decided to buy, was my guess. They didn't care about the bad news. And there was a lot of money buying, even though plenty of people were selling because of bad news. There was more money coming in buying, and it could have been foreign, a company that knew nothing about the news, like a foreign sovereign wealth fund or something. You don't know what's going to happen on these days, but definitely makes me more of a sort of a upward bias than downward bias guy. So yeah, that's what I'll say about that.
Interesting. So,
Did you want to comment on that? I know. I think I told you that at least the basic details of this story earlier.
yeah. I'd like to comment on it. Just a couple things that I kind of wrote down in my notes is that, I always look at stocks and stock.
Tell me an idiot. No, I'm just kidding.
I always look at stocks and stock, especially when somebody comes out with earnings, is almost like a report card, right? So it's almost like
that's a good point.
Yeah, you're bringing a report card to your parents, and your parents being whatever. So if you
You
tell your
better, you
parents
better perform.
exactly, so a perfect example, I'm making this very simplistic, for people who have kids or people have report cards, et cetera, in school, is that if you're getting A's all the time on your test, and then you come up with a report card and you show your parents, you should get an A, you know what I mean? But it's when you're getting A's and you end up getting a C or a D or worse, an F, that your parents freak out. They say, wait a minute, you've had good tests
Like,
before.
what happened? Yeah.
What the heck happened? So I always look at earnings like that. Now, it's a great, amazing thing that you said this, because companies especially can blow up earnings and still go down on a good earnings report. Been very, very, very common, especially in the tech field, because
Yeah.
they're just expecting the moon, or a lot of people they're doing um like they're do they're going with the flow. They're flow trading with money going into a certain sector, then being pulled out and going into another sector. So they're taking profits, for lack of a better word. Uh, so you've also got that on the why earnings necessarily may not necessarily, just because you have good earnings doesn't necessarily mean the stock will go up. I guess I'm really saying that. The other thing I did want to say about your mistake is yes, I'm always I don't like shorting stocks as much, betting that they're going down, because companies have an incentive to grow, incentive to have profit, incentive, you know what I mean, whatever. So you're going kind of against the house when you're telling them, hey, look, you're not going to grow, or the stock price is going to go lower. Doesn't necessarily mean you're wrong, because obviously certain sectors do go bust. There's no question about it. But I'm just talking about just as your aggregate, as a business, as market as a whole, profits, growth, and profits and growth are basically the main game. So I like to go with that type of trend. But yeah, that's very interesting. I mean, very. I mean, I guess let me ask you this: would you do? Have you done any more shorting since then, on like a big time basis, or no? Like since your mistake.
No, I mean the last short I think I talked about was car because it was clearly manipulation. This is a small, I think like 2% of my portfolio, maybe just 1%. Very nominal position, but this is a stock that was just it was just money that was sitting out there. I was like, yeah, I want to short it, but obviously the danger of shorting stock is, like I was in my short at 600, it went all the way up to like almost 1,000. So I had to put all my account in. I would have been right, but I would also been bankrupt before I was right. So that's one risk with I'm also not an expert shorter, so I don't like to do anything if I don't feel like I have an edge. I feel like in biotech, I feel like is an area that I do well in, um, compared to what the market can price in thing and probabilities and stuff like that. So I feel like I have an edge there. And I mean, time will tell, right? I mean, the Baker Bros clearly do based off their performance. You could invest in the MBI, invest Baker Bros, and your money would be way better in the Baker Bros. And not that they're available for you and me to put money in, but yeah, just speaking on the edge. So yeah, was it the only thing? What was your question?
Oh yeah, 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 yeah. My main question was, and you answered it. Was are you doing a lot of shorting now? But it sounds to me like you're not shorting too much.
No, no, no. I can't think of any because of the inherent risk of shorting. I've gone all in on one stack as I've been publicly, and you talked about and other things, but or virtually all in, not all my net worth, but my whole count. Um, I've come close to borrowing money. But you do like a risk reward analysis and like, okay, cool. I mean, unless there's like some zillionaire that's going to give you some great terms, um, it just makes more sense just to do your own money and just grow, like sort of more slow grow it. But you realize you're not risking growing. There's also a famous story of the Warren and Charlie's third partner that no one hears about because he leveraged and, went bad on a trade, and he's bye bye now, so to speak, at least in the financial world. I forget his name. I looked up his name briefly, but when I was just want to get his name, but he was one of the partners of them, but he believed in leverage and he levered and he you know got one pick wrong, and there you go. It just blew up his account.
Yeah, I mean, and again, I read a little bit, and again, I'm just going by memory here, that shorting wasn't really that regulated until recently, at least in terms of the stock market and rules, etc., until probably the 70s or 80s. You know, it's
Mhm.
always existed. It's always existed,
Yeah, yeah, yeah. I can only short
but it
hundreds
hasn't
of.
been like as heavily regulated with rules, etc. Like, for example, like the Hunt brothers tried to corner the silver market. I mean, and that was, I mean, obviously not shorting, but market manipulation, etc. So you needed rules against that. But I personally, I don't short. You know what I mean? I don't know enough about it to really play around with that. I do know people who've made a lot of money on it, but for me, that's not really my wheelhouse. But I'm glad you learned from your mistake, and it's good for audience to know. Is there any other final comments before we go after my mistake?
Yeah, yeah. I will say, like, so in the early days when Summit was very thinly traded, it looked like a hedge fund came in, and so the stock was. This is early when the stock was around $4, and it looked like based off the numbers, no one told me. I don't know the stock market or whatever, or I don't know the hedge fund or anything. But when I was looking at the trading pattern, the money and everything, and the fake, basically fake news essentially came out. It was a Seeking Alpha article with someone with 7 followers that came out, and the stock dropped by 40%, and that was the only bad news that I could find at least. And I was looking, maybe there's some paid subscription. I was just looking for free news and I couldn't find anything. Um, but likely it was just that was it. That was just that one Seeking Alpha account, a fake account, that probably doesn't exist, probably was deleted after the move. And it looks like they'd spent about $9 million, and they did make a lot of money, but it was so sleazy. It was like someone that would sell their grandma, because the good news came out, Chinese FDA approved it. Then they said, "Oh, this is like sketchy. Like, oh, this approval is actually not valid because it's Chinese data, and really, Summit has spent too much money, and something really sketchy." Just a little blurb of like a sentence, and then the stock price started crashing down. Now I still felt warm and fuzzy, so I was like, "Hey, I'm good." But a lot of people sold, including my uncle who owned a lot and lost money. And then that same firm, undoubtedly, their strategy was to buy at half price. It went up a couple days later over the weekend, about 3 trading days later, it tripled to 11, and it looks like they sold in the $11 range. So that $9 million move. So you could make money in that strategy. Now, if you're going to short a stock and you're putting $9 million, you probably have to have about $100 million to feel warm and fuzzy doing that and have no morals. So that would be sort of a Wall Street special. So that's one way you can make money shorting, but that's not something I would do. I don't do immoral stuff. So yeah, I wouldn't be doing something like that.
Sure. And yeah, our channel does not promote immoral
Selling your grandma for $1.
immoral
That's not
activity.
that's not the right channel.
Yeah, that's not the right channel. Our channel does not promote immoral activity in the market. Period. Anyway, we got about 8 minutes to go with my mistake.
Okay, hit it. No
Yeah,
pressure.
we'll hit it.
Not mine.
Yeah. Oh, well, I don't know if, well, maybe I could have lost 10,000, but my main thing was, and I still come to this for each day, is I'm an extremely, and you guys will know this after the last 6 months, extremely conservative investor, even
Yes.
today. But I
Yes.
am such a gambler today compared to what I was before. Oh my, it's crazy. Probably even when I
Putting
met Dylan,
1% of your portfolio in this company you just learned about this week.
yeah, and I know exactly. So for me, I think my biggest thing was having a lot of cash and not deploying it when I should have been deploying it, trying to look for the quote unquote perfect time to enter the market, when really the perfect time to enter the market is always the best time is today, and the better time was yesterday, or a year ago, or 2 years ago, etc. So my main thing was just being sure. Now, um, so I guess for me, it was loss of growth opportunity, especially, when I had the capital to do it. And you see a lot of this and this is, I guess, for the older viewers who always see the stock market as, oh, you can go down, it can, you know what I mean, like, well, whatever. And I don't want to risk the money, but really, the whole game of the world is pretty much markets. I mean, you look at it, companies want to grow, and a lot of economies depend on it, trillions of dollars, etc. Everybody knows that the world changes all the time, and the market's going to lots of times show you the changes before they actually implement them into society. So it's a good forward looker. So for me, I was always too fearful, and part of the fearful was I had nobody there to really teach me about how the market worked. You know what I mean? How could I buy? How could I sell? Tax implications, what to buy, what to sell, when to buy, when to sell.
Yeah, you didn't go to college for that. You went to college for something else, right?
What's that?
You didn't go to college for that, right?
No, 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 no. Yeah, yeah. Okay, so
Yeah.
yeah, I went to university for media studies to do stuff like this. Actually, so yeah, I did not go to school for something like this. So I had
Neither,
some
obviously.
good advice, some bad advice, some amazing advice, some okay advice or whatever, and I kind of mix it, and I guess the biggest mistake was not keeping it simple when I should have just entered into the market and done what I was doing right now, just go in the S&P, keep it in the S&P instead of just keeping it in cash and not knowing what to do and losing out on those gains. I mean, because I only really started to get more aggressive, and I wouldn't even call myself. I'm still a very conservative investor. I wouldn't even get into like conservative, get out of cash until, gosh, probably in the early 2020s when I did have capital. I was making capital, you know what I mean, in 2015 to 2020. And that could have been a great run up had I known. But then again, you always think I would have rather kept the capital than made a huge mistake and lost everything, right? And then start from zero and then not have anything. So it's like almost a catch 22. So you don't know what you don't know. So I guess for everybody who's kind of scared out there, to do it is, if you're super scared and super scared of making a mistake, just put little bits of money in there first. You don't need to put everything in there. Practice, or you can do what I think Dylan and I talked about this on the dinner one time. You can do practice accounts. You know what I mean?
Yeah, yeah, yeah. Paper
Dylan,
trade.
actually, you want to talk a little about that practice?
Yeah, yeah, I did that. So I also didn't have anyone to mentor me or anything, anyone around me knew, but I had a passion for books, for reading, that a lot of people don't have. So I just tackled the subject. I know, just 1 year alone, I read 87 hard copy books from the library. So I read fast, and I when I read a subject, yes.
Favorite book out of or favorite top? Can you give top three out of the 80? Maybe the audience will
I
like.
said Port Ad, Snowball, and Wealth of Nations, I would
Thank you.
say.
Go.
And yeah, no one's going to read, not no one, 99% of people are not going to read Wealth of Nations or Snowball because they're massive books. But Which Rich Dad, Poor Dad, you could listen to a little YouTube video for free on it for 4 hours while you're driving. All right. Yeah, I guess you could, like an audiobook basically on YouTube. And you could, it's written very simply. You could at least get the mindset of someone who's making money basically, like a Bill Gates or whatever. So yeah, top three books, yeah. So yeah, 87 books. Most of them were good. A lot of them are pretty repetitive, um, but yeah, and then also I did a lot of my own sort of like experimentation, and I did paper trading because I just assume I was just a regular guy. I'm not really very prideful or whatever. But everything I did, my first investments, my first trades accounts, they all did well. And I was just kind of like thinking, I do score higher on IQ tests. So I'm thinking, is it that's making it? I don't think so. There's plenty of smart people in the market. I think my thing is that I don't mind like really digging into something. It's sort of natural for me. And most people just it won't spend more than an hour learning about a company, which is kind of crazy. Like what you're gonna put like, like a huge amount of money in this company and you don't want to like think about it for like a week and like really like figure out if this guy, how's the CEO, what's his track record? Like to me, that was sort of instinctive. But I don't know anyone personally that I met that goes into markets. I guess besides the Phil Fisher, common stocks and uncommon profits. He was another guy, not alive with us anymore. No longer with us anymore. Um, but yeah, he was somebody that would drive and see the management and everything, and he was pretty serious about it, and I'm the same way. So I was like, well, I guess that's my edge. I mean, anyone could do it, but no one really seems to want to. But yeah,
I'm putting you on the spot here because my memory's pretty good still.
yes,
You remember that platform where you can pretend to trade? You
Wall
remember what
Street
it was called?
bets,
What was it?
Wall Street bets.
Maybe where you can
Yeah,
where
my
you're gonna
paper trade, virtually every stock brokerage account. I'm on Interactive Brokers, but you could do one in Schwab, you could do one in Moomoo, you could do one in Fidelity, you could do virtually any major trading platform will have a paper trading account they give you a virtual $100,000 and you just start trading that and see how you do. And I would give yourself a year. If you have the discipline. I mean, most people are lacking in that in my experience, but if you did it a year and then you did well, then I would say you qualify for investing in individual stocks. But most people won't do that, and we'll still do individual stocks regardless. But yeah, I would say I was planning on just sticking to the SPY or one of these index funds or something like that, because I didn't really think myself having an edge. I'm just a dude. I have no brother that runs a company, or guy that works at Wall Street that I'm related to or friends with. I didn't have anything, so I just figured, well, that's what advantage I have. So yeah, but it's a good way to see how good you are. It didn't bother me when my account went down virtually, and it doesn't bother me in real life when it goes down naturally. As long as I know my businesses are fine that I'm invested in, I don't really care what the price is or Bitcoin. I don't care if we were just talking about that earlier.
we did.
At 10,000, I'd start buying because I'm just starting to get a little too yummy for me. But I don't think it's going to go down there. If it does, then I'll start buying for sure.
Perfect. We got about 20 seconds. So what I'm going to say is on next week episode, we're going to do with our biggest positives on what we're doing. I will tell you this, just a piece of information is that we had potential rate cuts factored in. A couple weeks ago, we talked about it potentially just rates staying the same. We've got betting websites that say we could have rate hikes, a 60% rate hikes. Did and I looked at that. So we want you on June 7th, 2026 to keep that in mind. Rate hikes, the market doesn't like it because there's less cheap money. You got about